Hey, what's up everyone? Today we're diving into the world of Islamic banking. Now I know what you're thinking. Islamic banking? That sounds about as exciting as watching paint dry. But trust me on this one. This is about more than just money. It's about a financial system that aligns with ethical values. Islamic banking is rooted in the principles of Islamic law, known as Sharia. It's all about doing business the right way, with fairness and transparency at its core. We're talking about a system that prohibits interest, encourages profit and loss sharing, and avoids investments in industries considered harmful. Now you might be thinking, is this just for Muslims? Nope. Islamic banking is open to everyone. It's gaining traction worldwide because people are looking for ethical and socially responsible ways to manage their money. So, buckle up as we break down the principles and products that make Islamic banking a fascinating and rapidly growing sector in the global financial landscape. But before we dive deeper, let's understand why this system is so unique and how it stands apart from conventional banking. The foundation of Islamic banking lies in its adherence to Sharia law, which emphasizes moral and ethical values in all aspects of life, including finance. This means no interest, or riba, which is considered exploitative and unjust. Instead, Islamic banks operate on profit and loss sharing, where both the bank and the customer share the risks and rewards of any investment. This creates a more balanced and fair financial relationship. Additionally, Islamic banking avoids investments in industries that are considered harmful or unethical, such as gambling, alcohol, and tobacco. This ensures that the money is used in ways that are beneficial to society as a whole. But how does this work in practice? Well, Islamic banks offer a range of products and services that comply with Sharia principles. For example, instead of traditional loans, they offer murabaha, where the bank buys an item and sells it to the customer at a profit, with the payment made in installments. There's also ijara, which is similar to leasing, and mudaraba, a partnership where one party provides the capital and the other provides the expertise. These products are designed to ensure that all transactions are fair and transparent. So, whether you're a business owner looking for ethical financing options, or an individual seeking a socially responsible way to manage your money, Islamic banking has something to offer. Stay tuned as we explore more about this fascinating financial system, and how it's making a positive impact around the world. From its historical roots to its modern-day applications, Islamic banking is a topic worth understanding. So, let's get started on this journey to uncover the principles, products, and potential of Islamic banking. Trust me, by the end of this, you'll see why it's not just about money, but about making a difference. Let's get down to the nitty-gritty of what makes Islamic banking tick. It's a fascinating world where finance meets faith, and understanding its core principles is key to appreciating how it operates. At its heart, it's all about adhering to a set of core principles derived from Islamic teachings. These principles are not just guidelines but are deeply rooted in the ethical and moral framework of Islam. These principles guide every aspect of Islamic finance, from the types of investments allowed to the way profits are earned and losses are shared. They ensure that all financial activities are conducted in a manner that is fair, transparent, and beneficial to all parties involved. First and foremost, we have the prohibition of interest, also known as riba. This is a fundamental principle that sets Islamic banking apart from conventional banking. In Islamic finance, charging or paying interest is a big no-no. This prohibition is based on the belief that money should not be used to generate more money without any productive activity or risk involved. This is because interest is seen as an unfair exploitation of those in need of funds. It creates a system where the rich get richer without contributing to the real economy, while the poor get trapped in a cycle of debt. Next up, we have profit and loss sharing. This principle promotes a sense of partnership between the bank and the customer. It aligns the interests of both parties and encourages mutual cooperation and trust. Instead of just lending money and charging interest, Islamic banks share in the profits of a venture. This means that the bank has a vested interest in the success of the business and will provide support and guidance to help it succeed. But just like any partnership, they also share in the losses. This risk-sharing aspect ensures that both parties are equally invested in the outcome and encourages responsible financial behavior. This approach not only fosters a sense of solidarity, but also promotes economic stability and growth by ensuring that resources are used efficiently and productively. Then there's the prohibition of speculation, or maisir. This principle aims to eliminate excessive uncertainty and risk from financial transactions. This means no gambling or engaging in risky financial activities where the outcome is uncertain. It ensures that all financial transactions are based on real economic activities and not on chance or speculation. Islamic finance is all about transparency and avoiding excessive risk. This transparency builds trust and confidence among all stakeholders and ensures that everyone is aware of the risks and rewards involved. Finally, Islamic banking prohibits investments in industries considered harmful or unethical, or haram, according to Islamic teachings. This ethical investment principle ensures that all financial activities contribute positively to society and do not harm individuals or communities. This includes businesses involved in alcohol, gambling, tobacco, and anything else that goes against Islamic values. By adhering to these principles, Islamic banking aims to create a financial system that is just, equitable, and beneficial for all. Okay, let's unpack this whole no-interest thing because it's pretty central to Islamic banking. In traditional banking, interest is the bread and butter. You deposit money, they lend it out at a higher interest rate, and boom, profit. But Islamic finance sees this as exploitative, especially when someone is in dire need of a loan. Instead of charging interest, Islamic banks use a system of profit and loss sharing. Imagine you're starting a business and need capital. An Islamic bank might partner with you, providing funds in exchange for a share of the profits. If the business does well, everyone wins. But if it takes a hit, both you and the bank share the loss. It's all about sharing the risk and reward, fostering a sense of fairness and partnership. This approach encourages responsible lending and borrowing. Since the bank is invested in the success of the venture, they're more likely to assess the risk carefully and support businesses that align with ethical principles. Now, let's talk about speculation. In the wild world of finance, speculation is like gambling with money. You're betting on the price of something going up or down without any real knowledge or control over the underlying asset. Think of it like playing the stock market based on rumors and gut feelings. Islamic finance says hard pass to this kind of risky business. Remember the principle of Mazir? It's all about avoiding excessive uncertainty and gambling. Islamic banks are required to invest in tangible assets and businesses with clear economic activity. They're looking for real growth and value creation, not just quick flips and speculative gains. This focus on ethical investments ensures that funds are channeled towards projects that benefit society. It's about aligning financial decisions with moral values, promoting stability, and avoiding the kind of reckless speculation that can lead to financial crises. Section 5. Understanding key products in Islamic finance. Alright, let's dive into some of the unique financial products offered by Islamic banks. Don't worry, I'll keep it simple. Islamic finance is built on principles that promote fairness, transparency, and ethical investments. These principles are reflected in the various financial products that are designed to comply with Sharia law. First up, we have Mudharaba, which is a profit-sharing partnership. This is a fundamental concept in Islamic finance and is often used in investment projects. It's like a venture capitalist and entrepreneur teaming up. One party provides the capital, the other manages the project, and they share the profits based on a pre-agreed ratio. This arrangement encourages entrepreneurship and risk sharing, which are key elements in Islamic finance. Then there's Musharaka, a joint venture where two or more parties contribute capital and share both profits and losses. This is another cornerstone of Islamic finance, promoting joint ownership and shared responsibility. It's like starting a business with friends but with more paperwork. This is often used for larger projects and investments such as real estate developments or large-scale manufacturing ventures. The key here is that all parties share the risks and rewards equally. Next, we have Murabaha, which is a cost-plus financing model. This is one of the most widely used instruments in Islamic banking. Let's say you want to buy a car. The bank buys the car for you, adds a pre-agreed profit margin, and sells it to you on an installment plan. This method ensures that the transaction is transparent and that both parties know the cost and profit involved. It's like buying something from a store, but the store is your bank. This model is also used for purchasing goods like electronics, machinery, and even homes. Ijar is basically leasing. You lease an asset like a car or a house from the bank for a specific period and pay rent. This is a flexible option for those who need to use an asset without the immediate need to own it. It's a way to use an asset without owning it, and it's often used for big-ticket items. This can be particularly useful for businesses that need expensive equipment, but want to avoid the large upfront costs. We'll get into Sukuk and Takaful in more detail later, but for now, just know that Sukuk are like Islamic bonds, and Takaful is a cooperative insurance system based on mutual assistance. Sukuk provide a way for investors to earn returns without engaging in interest-based transactions, while Takaful offers a community-based approach to insurance, where members contribute to a pool that is used to support those in need. Section 6. Leading the way, prominent Islamic financial institutions. Now let's meet some of the heavy hitters in the Islamic finance world. These institutions are at the forefront of this growing sector, offering a wide range of Sharia-compliant products and services. First up, we have Kuwait Finance House, or KFH. These guys are pioneers in Islamic banking with a global presence and a strong track record. Next, we have CIMB Islamic Bank, a major player in Southeast Asia. They're known for their expertise in Islamic bonds, or Sukuk, which we'll delve into soon. Then there's Standard Chartered Sadiq, a global leader in Islamic banking and finance. They offer a comprehensive range of products and services catering to both individuals and corporations. And let's not forget Qatar Islamic Bank, or QIB, a powerhouse in the Middle East. They're known for their strong growth, profitability, and commitment to innovation in Islamic finance. Section 7. The rise of Sukuk, a Sharia-compliant alternative to bonds. Alright, let's talk about Sukuk. You can think of them like Islamic bonds, but with a twist. See, traditional bonds usually involve lending money with interest, which is a no-go in Islamic finance. Sukuk, on the other hand, are asset-backed instruments. Imagine you want to invest in a real estate project, but you want to do it in a Sharia-compliant way. You could invest in a Sukuk that represents ownership in that project. Instead of receiving interest payments, you'd receive a share of the rental income or profits generated by the property. Sukuk have become increasingly popular in recent years, attracting investors from all over the world. They offer a way to invest in real assets while adhering to Islamic principles, making them a compelling alternative to traditional bonds. Section 8. Islamic banking, a global phenomenon. Now, here's the thing about Islamic banking, it's not just a niche market anymore, it's a global phenomenon, with Islamic financial institutions popping up all over the world, from Malaysia to the United Kingdom to the United States. What's driving this growth? Well, for starters, there's a growing Muslim population worldwide, and many are seeking financial services that align with their faith. But it's not just about religious observance. People from all backgrounds are attracted to the ethical principles and social responsibility at the heart of Islamic finance. As the demand for ethical and sustainable investing continues to rise, Islamic banking is well positioned to capture a significant share of the global financial market. It's a sector with immense potential, and it's exciting to see how it continues to evolve and innovate. Section 9. Conclusion. The future of ethical finance. So, there you have it, folks. Islamic banking. It's not just about crunching numbers, it's about aligning your financial decisions with your values. It's about fairness, transparency, and social responsibility. And the best part? It's not just for Muslims, it's for anyone who believes in doing business the right way. As we've seen, Islamic banking is a rapidly growing sector with a global reach. It's offering innovative products and services that are attracting investors from all walks of life. And as the world becomes increasingly interconnected and conscious of ethical considerations, I have a feeling Islamic finance is going to play an even bigger role in shaping the future of global finance. So keep your eyes peeled, folks, because this is just the beginning. Peace out. If you enjoyed this video, don't forget to subscribe, like, and share. Your support helps us bring more valuable content to you. Thanks for watching.